After Bitcoin plummets, should we pursue short positions? How to deal with empty orders? If you are interested in this issue, please follow me to read. From the daily line, we can find that our today is very different from the previous K lines. This is a difference of 11.73% from the highest point and the lowest point of the daily line, which is about $3,365. If we only count the physical part, it is also 7.18%. In fact, we can review it a little bit. In fact, our current situation, it is nothing more than two very important questions to answer. The first is whether it will fall or where it will fall. The second is whether there is any danger of a violent rebound now. In fact, we can review our daily trading. There are such K lines with a difference of more than 10 percentage points between the highest price and the lowest price of a single K line. In fact, there are really not many. We can review it. Let's count it as one here. This is actually considered as one. We can take a look. If we talk about our highest price and lowest price, okay, 16% was an FTX event at that time. If we combine these two K lines together, we can also find that it is inserted downwards. A long needle. If we look at these two together, then we still step on the lowest point that our needle hits. We still have the K line and come back to this place. It is said that after we inserted the needle at the lowest point, he never came back. So we can go forward and review it. For example, 10% is really not much. So we have to catch this kind of needle. For example, it is said that a very long needle was collected in this kind of place. But you can see that he came back after that. But there was a rebound in the middle of him. But this rebound did not return to the bottom of our previous range. He did not go back. And then he stepped on the position of our needle. Then we can take a look at the position we just had. There was also a needle at this position. And when we were walking up, his rebound was the highest. The point is that at this point, it has not returned to the bottom of our previous box. And then we can continue to review it. For example, I think this principle is also a very classic case. We inserted this K line. After that, he followed up. He also stepped on the lowest point of our needle tip. You can see that we also returned to the point of the needle tip in the follow-up. And there were some rebounds. But he did not return to $4,000 or more is not good. So we can look at a few more examples. For example, we were in this place at the time. And we also experienced such a drop of more than 10% between the highest price and the lowest price on the daily line. Then we ended up also if the position of this needle is stepped on firmly. It has not returned to the upper edge of our previous range, the lower edge of the previous range. And when we were at this position of 519, I believe we have replayed many times in this way. A K-line like this violently fell by more than 10 percentage points. And he closed the lower shadow line. In fact, the position of the lower shadow line will be stepped on in the end. You see, we stepped on it many times later. Then his rebound will not return to the lower edge of our last range. He will step on the needle tip. So what is the use of our review? In fact, we can revisit our current market if we review it. When we go back to the current disk, we can find that we first emphasize this K line. Will this K line return to the position of our needle tip? Will it return to the position of about 25,000? I think it will. And before a rebound bounces back to 28,000, he will come back to confirm the position of the needle tip. If we review the past, this is indeed the case. And he can produce such the decline of the sub means that it will be difficult for the people who are trapped above us to get out of the trap. Otherwise, the main force of the dealer will have no room for profit. So if the average price of your positions falls above 28,000, then I think it's very safe. Even if you didn't take profit when you first plugged in, you can still wait for him to rebound back to 28,000. He will fall to the point of our lower needle to create us. If the tip of the needle is stepped on, we can still see if there is any danger of an immediate and relatively large rebound. That is, the risk of going up and then producing a large rebound. Is there such a risk? I think it is without you. It can be seen that our current yang line is very short and has no volume. If we look at the previous one, it immediately rebounded sharply after a sharp drop. For example, when we were at this position, I believe it will go well here. It's very classic. When we were in this market, Let's take a look at the volume energy at the bottom. The K line has a long lower shadow line. And its volume energy is almost a little lower than our previous one. That's all. You can see that we will start a very immediate rebound in the follow-up. If you don't have an immediate stop profit, the profit you took before will be completely vomited back. So when we have this kind of positive line with a large amount, even if he appeared immediately after the plunge, and we should also be aware of the risks. When we were in this position, I also thought it was a very classic move. I think we have two opportunities here, and we can identify them a little. The first is our root. The yang line has a long lower shadow line and the one with volume energy. Although it has fallen afterward, you can see that the latter one is also a yang line. It exceeds half of the volume energy of the front line, and the entity part has swallowed it. In the follow-up, you can see that he directly started a wave of immediate strong rebound. If there is no immediate stop profit, he will definitely encounter a large profit backtest. Well, let's go back to the current market. I think if you hold empty orders now, in fact, it depends on the average price. If the average price is above 28,000, then I think it is very safe. But if your average price may be more than 27,000 or 28,000, it is true that there is a certain risk of rebound. It depends on how you make a choice. It is best to do batch by batch. Is the most appropriate choice to disperse the risk. If you want to go long, you must not consider going long now. After our daily line turns short, I will start to think about how to go short on rallies. Let's take a look at Ethereum. If we want to go short, then Ethereum must be it is a better target than Bitcoin. Because Ethereum has been relatively weak since our Mavericks rise. When it rises weaker. When it falls deeper. You can see our decline. Let's just look at this daily line. There is a 14% gap between the highest price and the lowest price. Let's take a look at Bitcoin. If we only measured this daily line, it is only about 12%. So it is 2% more is a bit more than 2%. So Ethereum is still relatively valuable to operate. 2% should not be underestimated. If leverage is added, it is also a big profit gap. Besides, Ethereum is relatively weak. We can come take a look at his position. It is around 1700 and 1710. There's a very clear exchange. Maybe if we can't go up, we can rely on this position back to back and make a fill-in. Of course, the price of this position may be low. It must be bad. We have to wait for some signals to appear. Of course, the best situation is that there is a good and weak rebound, which can give us the opportunity to make up short positions. Thank you very much. Everyone is very welcome. You can like and subscribe to my video. Sharing and turning on the little bell is the greatest support for me. Thank you very much. Bye-bye.